TIPS, Treasury Index Protected Securities. Now, these are bonds that are connected to U.S. inflation, specifically the CPI. So the higher the inflation, the better the return of the bond, the more attractive TIPS generally are. Now, inflation-protected securities are throughout the world, the UK, Germany, Russia, though, interestingly enough, not really in Venezuela. Now, they came out of the United States in 1997, but their history is much further back to 1780 during the Revolutionary War. The state of Massachusetts was the first to put out inflation index securities. So there's quite a history. And what's amazing now is not only what the history of TIPS are telling us, but specifically the pattern we're seeing.
So let's look at TIPS through the iShares TIPS Bond ETF. Now, this is an ETF that tracks the investment results of an index composed of inflation-protected U.S. Treasury bonds. So it's a gauge of the TIPS market and reflects the TIPS market overall. And you can see from the beginning here in 2003, 2004, a 15-year rally. Now, as you look at this chart, see if you can see a pattern that has formed over the last 15 years. And perhaps when I move to the next chart, you will have seen this, a completed impulsive rally. 1, 2, 3, triangle 4, wave 5. Now, this is a pattern that started before the pandemic. It started before the collapse of 08-09. This has been unfolding for 15 years, a completed impulsive pattern to the top side. And even more specifically, if you look at momentum underneath, momentum peaked in 09, 2010, generally speaking in the third area. Despite price making a higher high, here too, divergence. Momentum did not make a higher high. So fifth wave divergence consisted with a fifth wave top as well. So higher high in momentum was in 3 of 3, divergence in 5 also helped support that this was a completed 5-wave move to the top side. And if we drill down even into the daily chart, this was where the triangle ended 4. You can see here too, 1, 2, 3, 4, 5. And even wave 5 broke down into 1, 2, 3, 4, 5. So impulsive structures throughout on the daily and weekly. Triangle 4 here, triangle 4 here. And as my friend Jeff Kennedy always points out in Trader Classroom, the angle of ascent changed in the pattern as well. So wave 1 had a certain angle, wave 3 had a certain angle. So everything consistent with not only a complete wave pattern on the daily and weekly charts, but also the momentum, angles, and triangles, long-term, short-term, a completed 5-wave rally.
So there you have it. An instrument with hundreds of years of history, growing liquidity over the last 20 to 25 years, and a great gauge of the market's perception of inflation. Clearly, based on the wave count on the daily and weekly chart, the market is no longer pricing or perceiving any risk of inflation. So there's only one question: how aggressive will deflation be priced in? We will watch the pattern accordingly.